The private sector in Uganda faces a multitude of challenges. These hindrances and difficulties are significant reasons for the poor performance observed within this sector. Limited capital is a major issue. The firms don't have enough capital to buy raw materials, machinery, land and so on to expand. This makes it difficult for some enterprises in the private sector to purchase modern equipment, which leads to inefficiency in production. Consequently, this results in low output and low profits. Limited skilled labor is another challenge. This lack of skilled workers makes the firms in the private sector produce low output and of poor quality, causing low efficiency and low productivity. The small size of the market for goods and services is also a significant problem. This results in low sales and sometimes even losses. It also forces private enterprises to produce at excess capacity, leading to low output. This situation discourages potential investors from setting up firms and existing ones from expanding due to the fear of making losses. Poor technology, or rather low levels of technology, is a major challenge. This leads to low productivity and efficiency, discouraging potential investors from setting up firms due to the fear of making losses. Alternatively, it causes firms to produce less output and of poor quality, which is difficult to sell. Limited entrepreneurial skills are another significant hurdle. This results in poor organization of the factors of production, leading to inefficiency and the production of low output within enterprises. It also discourages potential investors because they lack the necessary skills to set up and manage a firm. Moreover, this often results in poor management of the firms, leading to losses and sometimes the collapse of the businesses. High rates of corruption and low levels of accountability are also critical issues. This increases the cost of production, as private investors incur additional expenses in the form of bribes to acquire operation licenses. Alternatively, it reduces the amount of funds that could have been used for buying land, machinery, raw materials, and so on. Inadequate investment incentives or high levels of taxation. This increases production costs and reduces the profits of the investors, thus discouraging them from setting up firms and expanding the existing ones for fear of making losses. Or this makes private enterprises incur high production costs, hence low output and low profits. Political instability in some areas. This scares away potential investors from setting up firms and existing ones from expanding their firms due to the fear of losses to their lives and property. Poor land tenure system. This makes it hard and costly to obtain land for establishing investments by the private investors. It also limits expansion of the private enterprises, making them produce less output and earn less profits. Limited supply of raw materials. This discourages potential investors from setting up firms and existing ones from expanding because they're not able to produce high output and earn maximum profits. Or this makes firms produce at excess capacity, which discourages investors from setting up firms because of getting low profits. High rates of inflation. This leads to rising prices of inputs used in production, which increases the production costs and sometimes causes losses to the private enterprises. Bureaucracy. This is in the form of unnecessary delays and lengthy procedures that have to be gone through to obtain trading licenses, work permits, certificates of operation, and so on. This is costly and time-consuming for the private investors. Poor infrastructure, for example, in the form of a poor transport network, makes the transportation of inputs and finished products to the market centers costly, which greatly increases the production cost. This makes it difficult to access raw materials or the market. Ineffective enforcement of patent rights or copyrights by the government. This causes losses to the investors, thus discouraging them from setting up firms and expanding the existing ones.